Good afternoon, everyone, and thanks for tuning in to today's IEEE USA Livestream webinar, Insurance Concepts and Products, How to Secure Your Assets and Income. I'm your host, Jonathan Cho. This is the second webinar in our financial literacy series in partnership with IEEE member discounts. For more information on the previous webinar and the upcoming ones in the series, you can check them out through the link we've provided on the screen below. One moment, please. As well as in the comments section. IEEE USA's goal is to create programming that is valuable, relevant, and of interest to you. As such, we will be sending a short survey to all registrants after this event and would love your feedback. We value your opinions and would appreciate it if you could take a few minutes and share your thoughts. Joining us today is Graham Fuller from AMBA, or the Association Member Benefits Advisors. Graham serves as Senior Principal for AMBA, managing a nationwide team of business segment leaders, client relationship managers, and client account consultants, as well as directly overseeing the relationship with AMBA's largest clients. In addition, for the past 26 years, he's worked closely with AMBA's largest carrier partners, including New York Life Insurance Company, Voya, Lloyd's of London, Arch, Beazley, and MedLife, implementing group life, health, disability, and professional liability solutions for AMBA's association clients. Without further ado, I will now pass it off to our presenter. Welcome, Graham. We're very excited for what you have for our audience today.
Well, thank you, Jonathan. I appreciate the introduction, and good morning or good afternoon or good evening, depending on where you are today. Again, my name is Graham Fuller. I am the Senior Principal for the AMBA, Association Member Benefits Administrators. Before I begin, though, I just a little bit, and I know that we talked about my biography. We're going to spend some time today really talking about insurance concepts and products, how to secure your assets and income. I would like to say one thing, though. When we're talking about securing your assets, this is more of a course or a presentation on how to protect. So I wanted to make sure I clarified that. But going back, obviously, you know me now. AMBA is the IEEE Insurance Program Administrator for the IEEE Member Group Insurance Program that is based in Urbandale, Iowa. Like I said, and Jonathan, if you wouldn't mind going to the slide 4, talking a little bit more about AMBA. We have been a proud partner of IEEE since 1962. And again, before we begin, I do want to stress that my presentation today is not intended to provide you with any legal or financial advice. You should be seeking the counsel of a certified financial planner, an insurance agent, or even your attorney that you know and trust before you make any decisions on your coverage. Rather, today's presentation is really to discuss how the use of proper insurance product solutions can help you de-risk yourself and your family against financial peril in the event something tragic happens to you or prevents you from earning a living. And I really want to stress that second part, something that could prevent you from earning a living. And we're going to do a deep dive into a protection strategy on that I think everyone's going to find interesting. I was going to say, since the advent of COVID, we all have had to come to some sobering conclusions about our mortality and our morbidity. And this information, I really hope it helps make that evaluation process for you easier. Again, like I said, we're going to talk a little bit about the insurance products, what they do, how they can be utilized to protect what you've worked so hard to accumulate over the course of your career. And then from there, like I said, after we leave this, we'll obviously make this presentation available. Again, I would encourage each of you to have those discussions with your number one financial planners, your insurance professionals, and even your family to see if any of the suggestions that I'm making today make sense for you, your family, and your financial portfolio. And so before we dive in, one final word, I do want to thank IEEE, the staff at IEEE USA, Jonathan, David Imes, and specifically Lynn Coblin at the IEEE Operations Headquarters in Piscataway, New Jersey. I really want to thank all of these individuals for making this opportunity for myself and for AMBA possible today. So Jonathan, let's go ahead and go to the next slide for a minute, if you don't mind. We're going to start out just talking about some facts about life insurance. And really, I think we can all agree on this call today that life insurance can be a pretty dry subject. But we're going to talk about some of the types of life insurance and what they do. But first, I want to just give everyone some statistics that they can really kind of mentally chew on. So approximately 50 million households today recognize that they need more life insurance. They understand that they may be underinsured or completely deficient. And that represents actually 40% of all households in the United States. Interestingly enough, in 2022, there were nearly 5 million more US households that have life insurance coverage compared with results that we saw even clear back as far as 2010. 30%, alarmingly though, of all households remain uninsured. Now, one thing that I think is even a more sobering statistic, that in 2022, 106 million American adults were without life insurance or underinsured. And this could be for a number of different reasons, whether it's economic, lack of awareness, etc. But I wanted to shine a light of positivity on one specific generational group that is actually outperforming the rest of us, and that would be the millennials. And studies are showing that 70% of millennials own some life insurance. And millennial ownership of individual life insurance has actually increased by almost 50% since 2010. That's an amazing statistic. And really, when we look at millennials and why don't they buy life insurance, it really comes down to three reasons that actually transcend generational borders. One, you might have other financial priorities and you can't afford it. Number two, you simply don't know how much you need. And we're going to talk a little bit about that to make that, to kind of bring that into focus for individuals on this call today. And thirdly, and most interestingly enough, these individuals, they're not buying because they haven't been approached by a financial professional. And isn't that interesting that in this digital age where we are all connected one way, shape, or form, either through Zoom or through these types of webinars, or even just through our own cell phones, that individuals are looking for a trusted advisor to sit down across a table and really guide them through the evaluation process and what makes sense for them. And without that, people are resistant to buy. So, Jonathan, if you wouldn't mind, let's talk a little bit more about just life insurance, the different forms. And really, when we look at life insurance, and there's a couple of different types we're going to be talking about on the next slide. We could take away, if you look at the screen now where it says term life insurance, you can kind of just take away term life insurance and just focus on life insurance. So why is life insurance? Why is term life insurance important? And it's really important for two specific reasons. One is a long-term play, and the second is a short-term need play. So first, on the long-term side, life insurance is going to help you replace your earning power. It's going to help support any dependents that you might have at the time of your passing until they can become self-supporting. It's really meant to continue the way of life that those dependents had while you were alive. Also on life insurance, it's designed to pay mortgages and property taxes should you pass away, and things like college student loans. On the short-term side, there are a few needs, and I think this is very self-explanatory. So life insurance is going to pay the funeral or burial expenses, immediate expenses that would be accrued, or even final medical expenses. But what I'm really trying to get at here, and I think it's very interesting, is that should you pass away, your family still needs to be supported. So we've covered that, right? And your bills still need to be paid. And there is, for whatever reason, a shocking misconception by some who think that their families and their estates are completely relieved of their financial obligations and debt when they pass on. I would say that that is very much not true. I would say that misconception is irresponsible at best. So when we're thinking about this, we're looking at it from when you are no longer here How are those bills? How are those ways of life going to continue? And that can be supported through proper placement of life insurance, whether it's term life or some that we're going to be talking about on slide 7. So, Jonathan, if you wouldn't mind, let's talk a little bit about considering life insurance, things you need to keep in mind, factors that might influence either you to buy life insurance or to increase or decrease your current life insurance that you have in effect. So it's really important that life insurance, and I think some even insurance professionals like myself, we're all kind of guilty of this. We take out an insurance policy, we pay our premiums, but we take that insurance certificate and we put it in that safety deposit box and never think of it again. And we really need to go beyond that. And we really need to think about insurance as an annual, ever living, evergreen, if you will, type of coverage that needs to be looked at least, I would suggest to you, on an annual basis. So if you're not just looking at it on an annual basis, there are some incidences where you would want to really take a look to see if you are insured properly or underinsured, or if you actually need to buy a life insurance policy. And some of these I've outlined on this slide. So if you get married, that might be that one factor that says, I need to either buy more life insurance, because at that time I'm just insuring myself and my way of life. And now I have a partner who I also need to make sure that way of life continues for them. Having children, having kids, obviously you want to make sure that you've got that protection built in for them. This third bullet point that I have highlighted, and I think this is really essential, especially as we're starting to see the baby boomer generation move more into those later stages of life, is if you're caring for a relative, it's really important that you're taking a look at that, because you might be that single sole caregiver for your relative. And what happens to them? And how are those bills paid for that relative in the event you pass on? So that's also something you need to consider. Now, some of these, of course, are absolutely, I would tell you they're very logical, right? If you buy a new home, well, obviously you want to make sure that you're insuring yourself, and that so those mortgage payments, like I said earlier, continue. Changing jobs or career advancement. If your salary goes up, if your earning power goes up, then you want to make sure that your insurance, those benefit amounts, are equal to or kind of match up to that. If you're starting a business, if you are a key person, what a great time to take a look at your insurance policies and take stock of that and say, maybe I do need to insure more in the event that I am no longer, I'm no longer able to support that business because I'm not here. And I think the third thing, but I think the final thing that's really worth talking about is retirement planning. So with life insurance, obviously, when you start to move past retirement, you start moving into those older age categories, it may very well be a case that you have too much insurance, because we know that when you're in your 30s and 40s and 50s, you're insuring not necessarily homes, but obviously you have fewer family members, the kids have moved, the kids are still there. But when you're in those later age categories, some of that goes away. So it's a good time to take stock of how much insurance you have at that point. And perhaps it is wise to take a look at it and reduce it so that that benefit amount is commensurate to your current living life, your current lifestyle. And I think there's one other thing that I really want to impress on everyone. Recently, with the headwinds that are afforded by today's economy, individuals are really being put into a position. They're being forced to evaluate their life insurance coverage and decide if these policies are a true necessity or are they an expenditure that should be eliminated. If you are in this position, before you make that decision, I really want to encourage you. If you have to be in a position of you have to make the choice of maintaining the coverage or eliminating it, I really would encourage you to work with your insurance agent to determine if maybe just a modification to your coverage amount makes more sense than totally eliminating it. A lot of insurance agents, a lot of insurance companies are willing to work with their insureds to kind of see what makes more sense for them. Sometimes they'll change a payment option. Sometimes you reduce benefits. There's a number of different options. So again, if you do find yourself in that situation, reach out to your insurance agent, give them a call, say, hey, look, this is what I'm facing right now. Is there something that makes more sense for me? And I'm reasonably confident that they'll be more than happy to assist you in that way. Jonathan, if you don't mind, let's talk a little bit about life insurance solutions, because I think everyone's heard me talk about our annual renewable term life insurance, but there's a number of different insurance options that you can use to really help protect your assets that you've accumulated over the years. And some of them, and we'll spend just a little bit of time describing each one, because interestingly enough, we've all heard of life insurance, but some folks aren't familiar with, specific types and what they do. So the first one, obviously, annual renewable term. That is pure term life insurance. It's where you lock in rates for a defined term. Usually it's every 5 years, and that benefit amount that you apply for obviously would remain the same. Now, sometimes in these types of situations, the benefit amount will decrease as you get older, but term life is really designed for those individuals that you may have heard me talk about earlier, who are 30, 40, 50. They're paying off student loans. They've got families. They've got those types of obligations that would require rather a large amount of benefit to help pay off those things. So that's usually what a term life policy is. Now, there are other forms of term life. There are 10 and 20-year level term life insurance policies. These are term life insurance policies. These are policies where the benefit amount and the rates are guaranteed for either a 10 or a 20-year term. So you would lock in a rate and you would lock in a benefit amount for that either 10 or 20-year term. Usually when you come to the end of that term, you're given the opportunity to reapply for another term, subject to medical underwriting, of course. But these really are growing in popularity due to the economic upsides that they offer. Instead of being faced with rate increases every 5 years or entering into new age categories, you don't have to worry about that. These are locked in at those rates. So those are becoming more and more popular, especially in the United States, where people are seeing that economic value. When we talk about joint term life insurance is a type of policy that provides coverage for two people in a single policy. So generally, the policy is opted for by couples, married or otherwise, but it can sometimes be taken by business partners as well. So sometimes, you do see that option on the table. It is not as popular as what they used to be, I would submit to you, back in the 70s and 80s, but they're still available. When we talk about whole life and universal life, I think most individuals are relatively familiar with that, because these are very popular forms of life insurance that you can purchase. Whole life insurance, of course, offers consistent premiums and guaranteed cash value accumulation. The universal policies, they provide more flexible premiums and death benefits, but have fewer guarantees on that. So again, I really do. I would like to say all of these. There isn't a favorite here by me, and I forgot to mention senior life. Now, senior life is obviously a smaller benefit amount for individuals in higher age categories. It's usually considered burial insurance to really cover those expenses that are, just those burial expenses, those final expenses, if you will. But again, all of these have a position, have a place, and have values and advantages because they are going to provide that financial umbrage for surviving families. And, they do help offset expenses that would have to be covered by accumulated assets and paid for out of pocket. So really, going back again, it makes sense that you're taking a look at de-risking yourself and de-risking your out-of-pocket expenses by insuring through life insurance. So that is really what I wanted to kind of talk about with the life insurance piece today. There is another form of insurance that is becoming more and more popular. It's something we've all heard of, or maybe you haven't. And Jonathan, if you wouldn't mind going on to slide 9, I believe it's slide 9, I'd appreciate it. And it's called accidental death and dismemberment insurance. And this type of insurance, for those who aren't familiar, it pays a lump sum benefit to your beneficiary as a result of an accident, causing death or dismemberment or disfigurement, this is going to pay in addition to other life insurance benefits. So it is relegated to, as it is described, accidental deaths and dismemberments, accidents. The rates on these policies are very affordable. And really, I would also tell you from an underwriting perspective, usually these are offered at either a no or a guaranteed issue basis, so no medical underwriting, or you have to answer just a few simple questions. More likely than not, it's the former, not the latter. But just to, as we look at accidental death and dismemberment, and I'm sure individuals probably haven't thought a whole lot about this, but, during COVID, I think we found ourselves in a position where we were trying to become more active. Maybe we bought that Peloton, or maybe we were hiking or going out and enjoying nature, not being in those large crowds. Well, the risk of becoming hurt, that becomes even, greater, if you will. So something to think about to protect you when those accidents can happen. But listen to this. These are some statistics that the CDC recently published, and it really revolves around the latest mortality data regarding accidental death. So just something to think about, and why AD&D, as we call it, insurance, is important. So for all unintentional injury deaths, the CDC identified in 2022, the number of deaths was 200,955. So that means deaths per 100,000 in population, that's 61. And that actually takes the cause of death. It is the fourth leading cause of death in the United States. So it's very important that you consider that accidents do happen. We would all like to think that accidents maybe only require a bandage, or maybe only require, a very small, rehabilitation period. But that's not the case in a lot of instances. And it's important that if this happens, this is a supplemental insurance that could, again, help continue to protect your assets, your income, from having to pay further out of pocket. When you're looking at accidental death and dismemberment, for those of individuals who are not familiar with it, there's some things to look for in policies, and it's important. So, and again, we'll be sharing this information following the presentation, but some things to think about when you're looking for an accidental death and dismemberment policy. Make sure you're looking at a policy that is going to offer more generous benefit amounts. Usually these can range from $100,000 in benefit up to $500,000, sometimes even more. But benefit amount is important. Second, I would encourage everyone to look for a policy that is guaranteed, that offers guaranteed acceptance. Now, we did talk that there are a couple of companies out there that want kind of a modified underwriting. Let's answer a couple of questions. But for the most part, most reputable insurance companies do offer this on a guaranteed issue basis, and it will continue to renew so long as you pay your premium. Worldwide coverage. Now, that's really important as we continue to travel more and more. Accidents are not just germane, if you will, to happening in the United States or our home country. They happen while we're on vacation. They happen while we're on, foreign business trips. And sometimes policies will not cover those accidents if they are not in the person's home country. More and more coverages are opening that up so that coverage is worldwide, if you will. There's another couple of benefits I just wanted to talk about quickly. That is a seatbelt benefit. This is a very important benefit, whereby it's going to pay an additional lump sum each year it's going to pay an additional amount if the policyholder happens to pass away as a result of a car accident in which the individual is wearing a seatbelt. So there's some added protection that comes through with policies that have that benefit. And there's actually, the final two are the most important. Look for policies that have a child care benefit. So this benefit is going to pay an additional lump sum each year for a set number of years to help your spouse with children if you pass away. The other one I think is very important is look for policies that have indexation factors on it. So you want to make sure that the policy has a benefit that increases each year to keep up with inflation. So that's specifically important. So, and again, this type of coverage, it's relatively easy to obtain. You can either add it on as a rider to your current life insurance policy or as a standalone product. But again, really, this is something that I would say this would be a very economical way to enhance and really supplement the current life insurance policy that you have in place. Or if you are looking for what I would call more of a life insurance light type of policy that only covers in specific incidences, this might be something you'll want to talk to your insurance professional about. So with that, those are really the types of life insurance that can be utilized to help protect your assets, to help protect you from having to pay out of pocket expenses and really continue your family's way of life should you pass away. This next piece of the presentation is if you get anything out of today, it's going to be for the next 2 or 3 slides. And this is something that is specifically important to me. I am very passionate about this type of insurance coverage, this strategy that we're going to talk about. And so, Jonathan, if you wouldn't mind, I'd like to go to the next slide and talk about long-term disability insurance, or what we also call LTDI. So many of you, I'm sure, have probably heard of it through, whether it's your employer. There are many commercials out there that talk about it as well, both long-term and short-term disability. But there's a reason I'm talking about it today, and it's something I really want everyone to think about. For those of you who are not familiar with it, so long-term disability insurance, it's an insurance policy that's going to pay a disability benefit as a partial replacement for your income that you would lose due to an illness or injury. Most of these policies pay a fixed sum for a fixed period. We're going to talk about how that works in a slide or two. And then also it's going to, while others, well, let me back up and say it pays for that fixed sum or a fixed period, while other policies pay a monthly sum for the entire period that the insured is disabled from earning a suitable income. Now, and that's also determined by an individual's qualifications, experience, and training. But it's very important that you know what this coverage is, because as we go on to the next slide, and Jonathan, go ahead, I want to ask everyone, what's your biggest asset? And think about it. What is your biggest asset? Is it your house? Is it your car or Jeep, as the screen shows? Is it another property? Is it your wardrobe? Think about what it really is. And then let me tell you something. Whatever you think it is, except for one answer, I would tell you that you're probably incorrect, and here's why. Your biggest asset is not the ability. Is not your house. It's not your car. It's not your boats. It's not any of motorcycles or any of that. Jonathan, go to the next slide, please. It's actually your ability to earn a paycheck, to earn compensation. And if you lose that ability to earn, all of the homes, all of the cars, all of the motorcycles, all of the boats, all of that goes away. So really, when we're talking about protecting those types of assets, it is just so important to really think of it that way. You're protecting yourself. You're protecting that ability to earn. And a great way to protect that is through long-term disability insurance. I want to talk, just kind of give you some statistics and some data on disability insurance. I think you're going to find it compelling and interesting. The facts on disability. And this is something, think about this. And as you read through that next slide, Jonathan, please turn over there. Think about this. So when we're talking about disability, the likelihood of disability versus other events, when we think about likelihood of disability versus death, 1 out of every 106 people, home fires, 1 out of every 88 homes, serious auto accidents, 1 out of every 70 autos, but disability, 1 out of every 8 people. That is a very small number, in my opinion. And that tells us that disabilities, we don't want anyone to have to go through it, but the likelihood of it happening is greater than any of those others that I just mentioned, whether it's the accidents, the fires, the deaths. approximately 90%, and this to me always gives me pause, approximately 90% of disabilities are caused by illness rather than accident. There is a misconception that all disabilities are the result of, you hurt your back, you fall down the stairs at work, something like that. That is not the case. Matter of fact, the leading causes of disability, and I'm not sure how many of you know this, but as we look at this, the leading causes of disability are cancer, heart attack, diabetes, back pain, and arthritis. But the final one, and this is the one that continues to grow when we're talking from a claims experience standpoint, when I put my insurance hat on again, the other leading cause of disability are nervous and mental disorders. And really, when you look at that, and as we look back at COVID and what the pandemic and the isolation and the stress did to so many people out there, we can only assume and expect that the trend line on that will continue and will continue to increase. So again, those are the leading causes of disability. One final thing, and again, my point here is not to alarm anyone. These are just, this is empirical data that I'm providing you. Here's the other final piece. Disability does not impact just the middle-aged individuals, right? Or the older folks. 1 in 4 of today's 20-year-olds are going to become disabled before they retire. That is just a staggering statistic to me. So disability, it's transcending. It's not just for middle age. It's not just for the old. It's impacting younger people. And really, when we turn this back to nervous and mental and things like that as well, my gosh, we're gonna continue to see that. So as we know this, what is the best way then to kind of offset that? I would suggest again to you to really look at kind of the benefits of a long-term disability insurance. So the next piece that I want to turn to with respect to disability insurance, and we can go to the next slide, in order to begin to protect yourself from those financial pressures that are caused by disabilities, the best thing to do is put a plan in place. And one way to do that is to plan according to what I have devised as a needs pyramid. Many of you have probably seen these types of pyramids before. And again, this is a suggestion, but something for you to think about. Now, let's go back to what I said earlier. What is your greatest asset? Well, it's your ability to earn. And so that, as always, that income is going to be the bedrock, the foundation that everything else that you are, whether it's, you're in insurance, et cetera, it all sets on your income. But as part of that, and as you can see from the slide, that income also has another piece to it, and that's that disability income insurance. So to have that, that's really where your plan is built on. So you have your income, you're going to be insuring it. Then on top of that, of course, rests the auto, life, health, property insurance, making sure that all of those are taken care of. So in the event something happens, that again, you're still protecting that wealth that you've accumulated, those assets that you've accumulated. On top of that, then your retirement plans, investments, and savings. So you have all of that. And then at the apex, what does that mean? You're going to pass what you have on. So I would suggest to you that as you start to formulate a plan, and again, it's so important to sit down with your financial planner, your financial advisor, or your insurance professional and really walk through this and kind of see if you have all of those pieces that are going to enable you to pass on as much of the wealth that you have accumulated in those assets and not have to worry about, will they have to be sold off? Will any of this that I've accumulated, that I've worked so hard for, have to be turned over so that we can pay bills? You worked hard for it. I would suggest to everyone, protect it as much as possible. And again, this is kind of a little technique that's used. So Jonathan, let's kind of go on to the next slide. We're going to talk a little bit about disability insurance options, some of the basics. And again, some of this is probably unfamiliar to individuals. For those of you who currently have a disability insurance policy, whether it's through your employer or you have an individual one, I applaud you. This is, again, I think it is just so important. Obviously we talk about health insurance and things like that, but gosh, this is just, it is so important to really be thinking about this type of coverage. It might not be for you, but I would suggest if you're talking to your financial advisors or your insurance agents, they're probably going to really want to sit down and talk to you about the values of it. So let's talk about individual disability basics. So like I said earlier, disability insurance is going to replace income based on a flat dollar amount up to a maximum percentage of your salary. Those benefits are paid after a specific period of disability. It is commonly known as an elimination period. Sometimes insurance companies call it a waiting period. Sometimes it's called a deductible. So what that means is there is a period where benefits aren't paid, where you wait for them to be paid. And this period can be anywhere from 30 days to 360 calendar days. And really that is going to impact your monthly premiums as well, how long you wait before the benefits start to be deployed. Also on the disability insurance options, these benefits are paid for a specified length of time. So these benefit durations, they're very customizable. They usually are anywhere between 2 years to your Social Security normal retirement age. Obviously, they don't go on past that. But again, when you sit down with your insurance agent or your financial planner, talk to them about that and really kind of work to see what's going to work best for you. These policies can also include what we call an own occupation, or you'll hear your insurance agent call it an ONOC period, during which the criteria to meet the definition of disability is based solely on your own occupation. So, and then after which the definition is based on any occupation, and that can range again from 2 years to SSNRA. Now, the one thing I will say, there is one significant advantage to individual disability insurance. And that advantage is that benefits are not taxable to the claimant. And that's because you are paying that individual policy with post-tax dollars. Now, if you have a group policy, say through an employer, it's important because this is definitely an advantage to the individual disability plan. After taxes, income replacement, once you start to collect benefits on a group policy, after taxes, income replacement is usually closer to 47% of your income as opposed to 60% that most disability pays out at, excuse me. Jonathan, let's go to slide 16, okay? Thank you. So when we're talking about disability insurance, the other thing to really work with your insurance professional on is how do you calculate the right amount of benefit to protect those assets? First of all, as you look at your current portfolio, you need to make the determination, do you have any other group or individual disability insurance policies in place? Because these policies will coordinate with one another generally to pay out at a combined rate of 60%. There are policies that go beyond that, and then that's something that you'll want to talk to your insurance professional about as well. You also, as you're considering it, looking at other insurance that you have, you need to take into consideration any funds that you have in your savings account and any vacation and sick time. All of that is going to go into, how much you can afford to pay to support yourself while you're in an elimination period, etc. So that's important that you have all of that. And then again, as I said earlier, you want to carefully review how each of these plans work individually and how they combine. You need to really watch, and it is so important. I know all of us are, reading that fine print. It can be kind of a chore, but it is important when we're talking about disability insurance. You need to watch for the other income offset sections in those policies. And that's usually I wouldn't say it's always in the fine print, but make sure you're paying special attention to that to see if it's in there. Then what you really want to do after that is, calculating how much of your income is actually replaced based on the benefit maximum. So you need to be sure to factor in items such as taxability of any group disability benefits. You also need to determine if you anticipate any other sources of post-disability income. But the most important, and I think this is the most basic, is you need to calculate your monthly financial obligations. That's really going to give you a nice map as to where you need to be, as well as to what these policies will be able to afford, et cetera. So things like rent, mortgage, utilities, groceries, gas and transportation, things right down to cable, internet, and phone service. All of that needs to be factored in as you're starting to determine the right amount of the benefit for you. Jonathan, if you wouldn't mind, we're going to move on. And again, let me start by saying we'll go to the next slide here, but that really is what I wanted to talk about with disability. It is a critical piece to help you protect yourself, and really to help protect your earning power. So again, I'm not here to give anyone any advice other than please consider it. Please have the conversation with your insurance professional, because if you don't have it, it is always worth having the conversation. It's always worth reading about it. And then if you do determine that that is a need of yours, obviously I would recommend doing something about it. So finally, and I know we are almost 3/4 of the way through the presentation, there is another piece of this that I think it's important that we talk about. And it is not only protecting your assets, but protecting your business. And that comes through professional liability insurance. And obviously, it's very important that you're looking out for yourself, especially in this type of litigious society that we live in today. And really what I wanted to talk to, and it's important, this transcends beyond these two groups, but if you are a consultant, if you are what I would tell you, you're doing some sort of a moonlighting job, if you are a sole proprietor, it's really important that you look at this. There is another misconception out there that, especially if you're doing consulting on the side, that somehow the employer professional liability coverage that you have is somehow going to protect you on some of these side jobs. More often than not, it won't. So it's important that if you don't have it, you consider it. So as we look at professional liability insurance, a couple of things. What does professional liability insurance do and protect? Well, first of all, and this is a very positive thing, it's going to create opportunities for new work projects for you, right? Many firms are going to require that their consultants or subcontractors carry that line of coverage. Without it, it becomes more and more difficult to get hired on for a job. It does help remove any unplanned liability for your clients. And it's also going to support your expertise in sound business practices when you're looking at, engaging in a job. Having that currently in place really does send that signal to an employer, or, that really this is an individual who is professional. They have that, these standards are built in, and it really, again, creates an opportunity. But I think most important, and I think this is something that we all talk about, it's going to protect your balance sheet and your reputation, right? So professional liability insurance, it's going to limit your out-of-pocket expenses that are going to result from a claim. It's really, and this second point here that I'm going to make, did you know that 70% of all claims incur only legal defense costs? So the defense costs alone are substantial, and it's going to really offset that. The other thing is many lawsuits name all entities involved in a project, and as such, you're going to need to defend yourself even for a frivolous lawsuit. So if you think it can't happen, I'm not saying it will, but the likelihood of it happening there is a probable likelihood. So make sure that you're covering yourself with that protection of a professional liability policy. It's funny, as a funny aside, they say anyone can sue anybody for anything these days. And that adage is exactly why professional liability should always be considered, especially if you do not have it in place. So Jonathan, let's go ahead and talk about the three key protections on the next slide. So professional liability insurance helps to prevent what? Loss of time, loss of money, and damage to that professional reputation. Now, more specifically, financial protection for professionals against consulting and or design errors or admission. That's what it's really driving to protect. These policies pay defense costs and damages in the event of a covered claim. They pay damages awarded in a lawsuit, and they typically will also cover bodily injury and property damage if the claim is a result of your negligent design. I don't ever want to suggest any of you are negligent in your design, but again, that is a real probable, risk out there. So that is really what professional liability is designed to do. Jonathan, I know we're getting short on time here. I want to make sure that we have a little bit of time for questions as we start to kind of go back to professional liability insurance and what we should be considering when we're looking for coverage. A few things that you want to keep in mind and make sure you're talking about this with your insurance professional is, what do the policy deductibles look like? What are the actual coverage limits of liability associated with the policy? You don't want to enter yourself into a policy where the limits aren't adequate enough that there's still going to be out-of-pocket exposure for you. Does it provide for self-employed or firm coverage? Does the policy actually cover you for a preferred discipline? Obviously, there are a lot of specializations these days, so it's important that you're looking at those policies and making sure you have the right coverage that's going to protect you. Obviously, looking at projects and services, what the policy will and what the policy will not cover. Also, from an insurance company standpoint, what their claims history are. If you're going, I would tell you this, is everything looks great on paper, but do some homework, do your research, look at some of these companies. And these are quick Google searches. You can really look at, whether a company's AM Best rating or, what their financial situations are. It's good to have a very solid professional liability insurance company behind you. You really don't want to take the risk of having something that might not be adequate if a claim were to arise. And then also on doing that kind of research, if you will, on these companies, make sure that these companies have a professional track record in business practices. There was a time where there were professional liability insurance companies that weren't around too long. Most of the players in today's market space are very solid companies. But again, it's important that you're working with your insurance agent, your financial planner, to identify the carrier who is financially sound, that's going to pay those claims, but also that is going to be there over a long period of time, and they are very solid. Jonathan, let's go ahead. I wanted to just talk real quickly, and Jonathan, I am looking at the clock. 2 more slides here just to talk about when we're talking about professional liability insurance and some of the additional risks that we are seeing in today's society, in today's marketplace, that you need to be thinking about. Professional liability insurance, especially for engineers, you need to be looking for coverages that are going to cover technology risk. So obviously, a lot of design, a lot of things are being done by a computer. So computer network security and privacy liability coverage for that. And that really kind of points to, if there is an unauthorized access to computer systems, disclosure of personal identifiable information, and compliance with privacy policies. You want to make sure that you have that policy that covers that, and that insurance company that's going to cover that. Another thing that is becoming more and more prevalent, and I would suggest that maybe all of us have been kind of exposed to privacy breaches. You want to make sure that you do have coverage that would consider privacy breach response services. That is not to say that every company offers that, but that's why it's so important to work with your insurance professional. So you want to make sure that there might be something in place that is going to cover costs of computer security experts to determine cause, attorney's fees to comply with breach notification laws, and then obviously notification services to the impacted. All of that has a cost. Without the proper coverage, there is an exposure to you that could have to be handled out of pocket. So again, another consideration. Jonathan, finally, we are on the last insurance slide, I would say. When we're talking about other items to consider, additional risks to insure against, and think about this, please, and make sure you are talking about this with your insurance agent or financial planner. 1, intellectual property risk. 2, internet content liability and breach of security in relation to denial of service. unauthorized access and theft of data, electronic transfer of data functions, copyright infringement, privacy liability, and reputation management reimbursement. These are all things that when you are going through the application process, you just need to be asking yourself, you need to be asking the insurance company you're dealing with. It's just so important to make sure that you have all the defense possible. Now, with that, I know we have 10 minutes. I do want to open it up for questions. I would also say this, and Jonathan, I don't know if you have a few final remarks, a couple of things. Again, the purpose of this is not to recommend a specific coverage or anything of that nature. It's really to give you some things to think about to help protect yourself, and the questions and information to take back, again, to that insurance agent, to that financial planner, to an attorney, to have them look at that and give you that proper licensed advice on. So that's really important. Obviously, as AMBA is the insurance program administrator, my job today, and I think everyone is going to be happy to hear, not really here to do any type of a commercial for the IEEE member group insurance programs, but I would tell you that if you do have questions, if you are interested in some of these products, I would like to invite you to the program and take a look at it. Our website is www.ieeeinsurance.com. There you can go through a whole host of the different product solutions that are offered. But again, this is totally, really meant for your education. But if you do have questions, certainly go out to the website, look around there. If you have any questions specifically for me outside of the final 8 minutes that we have, I'm more than happy to set up some time. We can have a phone conversation, we can Zoom, Microsoft Teams, you name it, we can make that happen. But again, I really wanted to thank everyone for joining today. It's a lot of information, a lot of stuff to chew on. But again, I think it's all something that really stands up to help you protect yourself against some of those things that might take away from all of the wealth and the great things that you've worked so hard for over the course of a career. So Jonathan, I'm going to pause there and I'll turn it back to you.
Fantastic. Thank you so much, Graham. A lot of really comprehensive information for our audience. I'm sure it'll take some time for them to all mull it over. But in the meantime, we will open up the floor for questions, and we'll quickly get through them, Graham. So
Sure.
first question, this is regarding the beginning of the presentation when you went over some of the statistics.
Yeah.
One of our audience members asks, can I know where these statistics
Yes.
are found?
Yes, those are most of those, and I will have the citation. It's through an organization called lifehappens.org.
Fantastic, thank you. This next question, and I think this is regarding why consider life insurance and when you're factoring in costs on an annual basis. What about planning for the great unknown, meaning medical bills? Should that be a factor? And is that an important factor when considering life insurance?
I guess I don't. Can you repeat that again, Jonathan? I guess I'm a little bit.
Would medical bills, when factoring medical bills, would that be a big thing to consider when thinking about getting life insurance?
I think it's something, it's worthy of conversation, but I would really encourage you when you're looking at that, if you are seeing, a lot of medical bills and, that is something that you want to take to your insurance agent, and it's something that you really want to have that discussion with. So I do think it merits further conversation.
Fantastic, thank you. And I know you kind of just answered this question, but our audience member asked, does IEEE offer a professional liability policy?
Absolutely, they do. And as a matter of fact, so there are a couple there's a choice, and we have a choice platform. We work with two companies. Number one, we work with certain underwriters at Lloyd's of London, and then also Beasley Insurance. So these are two of the largest professional liability insurance underwriters in the marketplace. But again, Once you go to the website, obviously access the professional liability drop down. We can do a couple of things. Number one, we have licensed agents that are and underwriters that are available to assist you to answer those questions. We have a chat platform. We are more than happy to assist you in making some of these decisions at any point. We're happy to do that. But yes, we are proud of those programs. They have served and protected a number of IEEE members throughout the years.
Fantastic. Thank you, Grant. Graham, excuse me.
I've
And
been told
to our
worse.
audience,
It's fine.
apologies, slipping up my words today. And folks, I have actually just linked a specific page regarding IEEE's the IEEE insurance, professional liability insurance in the comments and chat section as well. So be sure to check that out. This next question, Graham, our audience member asks, what coverage costs can vary by state, region a lot? For instance, flood insurance can be $50 or $1,000 depending on the flood zone.
So what coverages?
What type of insurance? I believe that's the question. What type of coverage do you think can vary by region a lot, so it won't be
Well, yeah.
consistent throughout?
Well, sure. When you're talking about property and casualty coverages, that can vary. Really, when you're talking about life insurance and how that is underwritten, I mean, you're going to see in many instances that those cover not necessarily the benefit amounts, but they are subject to different companies are going to have different limits, right? But the costs are also going to be determined, especially with life insurance, not the AD&D, because we know that that's generally, it's a guaranteed issue. But depending on your health status, a lot of companies will issue life insurance policies that are based on, number one, a select basis or a preferred rate or a super preferred rate, depending on your health status. So geographically, that generally isn't going to play into like life insurance or disability insurance. The geographic variances generally pertain more to the property and casualty side of the house.
Fantastic, thank you, and thanks for the question, Scott. Our next question: what is your advice on umbrella insurance or concealed carry insurance?
I will, in full transparency, I would always tell individuals on the concealed carry, that would be something you'll want to have a discussion with your insurance agent or your independent insurance agent. They'll be able to best serve you with that type of advice. When you're talking about umbrella insurance, I would assume that the question is coming from an umbrella from the homeowners umbrella, if I'm not mistaken. I've always been an advocate for it. I'm not in a position to recommend one way or the other, but again, it's really important to have that conversation with your insurance agent because it really does protect above and beyond what a normal homeowner's policy would offer, if that's what we're talking about, and I assume it is.
Thanks, Graham. Our next question. Sorry, let me just get through them. We do have a few more. What do you see the future of information technology with life insurance?
That is a great question. So information technology, and this is something, again, I want to stay away from, any type of an advertisement, but information technology, the advent of life insurance underwriting portals is really, we are in a place right now where the life insurance industry, they have been static over the years, but they are making great technological improvements in how they're underwriting. A great example is the work that we have done for the IEEE member group insurance program, working with our carrier partner, New York Life. They do have that carrier application portal in most instances with that type of technology built in, up to certain benefit amounts. We can get a decision made for you generally in under 10 minutes. So I would say in the last 10 years, and I know my friend Lynn Coblin is out there, we would say that we have been traveling, we are light years from where we were. And insurance companies are really pulling from different sources when they're underwriting. It's not just a medical information bureau or a doctor's file. They are accessing other things like the DMV, et cetera. So they're really working on that, and they've made great progress. And interestingly enough, it really, and this is what we had hoped, right? It really makes for a great customer experience. And I would tell you, maybe I will do one little advertisement. If you are looking for a term life insurance policy, please feel free to go to IEEEinsurance.com. We go through the portal. We have rate calculators. We have agents on standby. We are happy to assist any way we can. But I think you will find the technology is great. It's very easy, and it gets you in and out in a very short amount of time. No longer do you have to fill out a paper application. You can if you like that, but it is digital. And again, getting back to the question, we really have seen advancements for the positive.
Fantastic. Thank you, Graham. So I know that we've reached the end of the hour. We do actually have a few more questions. Would you possibly have time, a few more minutes to get through them, or
Yeah, I'm happy. Yeah, I appreciate everyone making time for me. So it'd be my pleasure to spend a few more minutes. I'll try and
fantastic?
answer as best I can.
Fantastic. Thank you, Graham. And folks, if we don't get to your questions or if you have any that come up after the end of the live stream, feel free to reach out to Graham. We'll provide you with his contact information in the email that we send out along with our feedback survey. So stay tuned for that. So Graham, this question from our audience member, can you talk about the quote unquote rich man's Roth or universal life?
It's really so I would tell you that the universal life, it's very specialized. It is something that I do not work with. So my level of expertise is very shallow on that. And I'm just trying to be transparent. I would really encourage in that instance to reach out to your insurance agent and have that discussion. There are many individuals who I know that do believe in it. They do find advantage to it. But obviously, it does have somewhat of kind of can have a reputation to it. But again, really don't have much comment on that. I don't myself, I do not own one of those policies and I don't work with it. But again, there are individuals out there that are big supporters of it, while others have a completely different opinion. And I'm sorry I can't go into detail on that.
No worries. Thanks for the insight. Um, our next question, any emerging life to insurance products I should be aware as an IT professional that would help my career?
As far as life insurance is concerned, I would tell you that life insurance is life insurance, and they certainly can design different terms. We talked about the 10-year, the 20-year. What really the real innovation is coming in some of the policy features that are contained within the life insurance policy. So one innovative, what I would say, an innovative policy add-on would be something that, and if you don't know about it, I'll take just a minute to describe it. So there are riders that you can purchase, or sometimes it's just an additional benefit that you can have. So they're called accelerated death benefits. So if you have, say, and I'm just using this, $100,000 benefit, and if you are able to certify that you are unable to achieve what we would call, certain activities of daily living. ADLs are very well defined by insurance companies, and if you're not familiar with them, do a quick Google search. It'll come right up. But if you're unable to meet certain criteria, the insurance company will take a portion of that benefit. And also, it's important to note that you would also need to be certified as having a certain amount of time left to live. Once you've checked those boxes, the insurance company will pay a certain proportion of that death benefit to you now while you are alive, to use that to help offset your medical expenses, etc. So that is a very unique feature. That's a critical illness rider. There are things like that. As far as other types of insurance, I don't really see a lot of full innovation on that, but it's those little nuances within each policy that are really making a difference and bringing more value. So if you are working with an insurance agent, it's important. The question is very legitimate to say, hey, is there anything else as part of this policy that I'm going to get that, maybe it is an accelerated death benefit, things of that nature. What else does this pay for? Some policies, there's a whole host of different things that insurance companies are doing to really enhance the value.
Fantastic, thank you. Just a couple more questions and we'll be done. So this question is kind of going off of the previous question on a regional or state
Mhm.
costs. Would you happen to know, is intellectual property risk more expensive in certain states due to state laws? Any idea on that?
I cannot answer that right now, but if the individual who asked that question, if you would like to submit your name, we would be more than happy. I'd be more than happy to have one of my underwriters get back to you and talk to you about that.
Great, thank you. And as Scott Thomas here is one of our IEEE members. I know he has he'll be able to reach out to
Yes, Scott,
anyone.
please do reach out. We're happy to do a deep dive on this.
Fantastic, thank you. And actually, we have a statement from my colleague Lynn Coblin. Portability of life insurance is important if you likely have a job that will change employers over your life. So thank you so much, Lynn. Really appreciate
Well,
you joining us.
and I would say so, Lynn, and Lynn and I have a great relationship. So I have to add on to that. So portability is another feature, not only just for life insurance, this type of life insurance, but individual disability. It's totally portable. If you have the coverage through your employer and something happens to your employment status, you're not necessarily guaranteed to take that with you. So that individual disability policy has that benefit as well.
Fantastic. Thank you so much. And so just to close it off with my own question, actually, just because I'm curious if you have any insight, any tips on saving money while still getting the coverage that I want to get?
Any tips on saving money? Well, it's really, I would say as far as saving money is concerned from buying insurance, you really just need, number one, you need to make at all times, do not, how do I say this? Jonathan, whatever you do not align yourself with a carrier that is not highly rated. You want that, obviously you probably want to pay a little bit more to have that type of
Mhm.
security. But I would also tell you to really, as far as a money savings perspective, make sure that you're not over insuring. But then also it comes back to value as well. When you're looking at an insurance product, whether it's, life insurance, what are you getting for that dollar? So price obviously is important, but you want to make sure that for the price you're getting a great value for it. So I really can't say there's one way or another to save money. But what I would say is align yourself with a solid company that has high carrier ratings, but then also make sure that you're getting a good value. And there are, policy riders, there are features to the policy that are going to really, make the spend worth it.
Really great advice. We'll keep that in mind. Thank you, Graham. Well, with that being said, Graham, unfortunately, we are out of time. I know we could go over this for a very long time. Graham, thank you so much for joining
Yeah.
us today. Really appreciate the insight you provided for our audience on leveraging insurance and the various policy options they have access to.
Sure. No, my pleasure. Would love to come back sometime. Maybe we'll talk about something a little bit different. But yeah, this was great. And I just again thank you for everyone taking time out of your day to come to this and listen to me.
Definitely would love to have you back. And thank you to our audience members for tuning in and for your great questions. Our next webinar in the financial literacy series in partnership with IEEE member discounts will be on Wednesday, March 8th at 2 p.m. Eastern. The registration link has been provided below. We'd also like to mention that IEEE members can take advantage of exclusive and discounted pricing on insurance and a variety of products and services that can add up to substantial savings. Discover what IEEE member discounts can offer you through the link provided below. Let me just get that up real quick. Please don't like to share, excuse me, please don't forget to like, share, and subscribe to our channels on social media and check back daily for future live stream updates. Have a great day, everyone.